I'm Matt Bouchard with REIT.com here in New York City for REITWeek 2014. Joining me for this CEO Spotlight is Ed Pettinella, President and CEO of Home Properties. Ed, thanks for joining us.
Thank you, Matt.
Now this year marks a pretty important milestone for Home Properties. It's your 20th anniversary of trading on the NYSE as a public REIT. What does that milestone mean to you?
It's a huge accomplishment. I've been here 13 of the 20 years, and I've seen the company really grow and grow in many ways. I think we can say we stayed true to form to our original founders, Norman and Elsa Leanhouse. They had this vision that they would buy C quality assets and upgrade them to Bs. And I would say 20 years out, we're basically still doing that. And when you think of some of the statistics, where we were in the summer of 1994 to where we are 20 years later, we raised, I think, $100 million in our original IPO, and today our total market cap, I think, is $6.5 billion. We started with 2,000 units, and we're now up to 43,000. We started in upstate New York with one state operation, and now we have 10. And lastly, we were in what I would call low barrier markets in upstate New York, and we completely converted to high growth, high barrier in 10 states up and down the East Coast and in Chicago. So all in all, I think it's been a major accomplishment. A lot of it's been the board of directors and management's ingenuity and strategic planning, but a little luck along the way to get Home Properties where it is today, a stock that did its IPO at 19, and today it's at 62-ish, and it's been great. It's been great being part of the NAREIT family. They've contributed a lot in terms of where we've gone and what we've done and how quickly we've done it. So overall, it's been a great ride.
And with all those accomplishments and all that activity, in your view, what's been the most transformative move that's been made in the company's history?
I'd say a few of them. Going from upstate, more of a mom and pop environment, low growth, low barrier, making the strategic shift to high growth, high barrier, the major MSAs on the East Coast and in Chicago. The second one, I think, would be getting completely out of the Rust Belt, Detroit, upstate New York, the Ohio Valley, and moving all of those assets to those high growth, high barrier markets along the East Coast. And last but not least, our company was a complete secure shop, meaning we borrowed completely from the GSEs, Fannie and Freddie, to one today where now we have two ratings, one from Fitch, BBB, another one from Moody's, also Baa2. And in August, we'll actually have finished the trilogy where we'll have the third and final rating from S&P. That will be a BBB. So we've vaulted the company from a secure shop to one that has a very strong balance sheet and has strong investment grade ratings by all three by the end of this year.
And lastly, your company's been quiet on the acquisition front so far this year and only made one disposition. What are you seeing in the market as it relates to transactions, and how is that shaping how you look at your transaction activity?
First, I would tell you never count out Home Properties. First of all, January to April is generally a slow period of time for acquisitions. Right now, we're pretty active. We're active in areas like Philadelphia, northern New Jersey, Boston, and Chicago. So we've projected that we do upwards of $250 million in 2014. I think we've got a good chance of doing that. So acquisitions are prevalent, and we're very aggressively going after them. Conversely, on the disposition side, we did one large deal in January, but as we put on the $250 million, it'll pretty much be a zero-sum game. We'll probably do another $140 million of sales, but that'll be predicated on when we do the acquisitions. But it'll be iterative, and I think we'll accomplish that also. So all in all, it should be a pretty busy year in both acquisitions and dispositions for Home.
Ed, thank you so much for joining us today.
Thank you, Matt. Thanks for having me.
For more on this and other REIT-related news and analysis, be sure to visit REIT.com.